Let's talk about the cost of chasing great, amazing rates at all costs. So you've probably heard the expression, there's no such thing as a free lunch. Well, that also applies in the mortgage world. And we'll get into a case study to show you exactly how this can pan out elsewhere. So how does this all work into an example? All right, we had a client, and at the 11th hour, their great rate turned into a nightmare. So with few days before they're closing, again, their deposit's already binding, like they cannot get that back. They are told, actually, you have to pay off $40,000 worth of student debt. Of course, the client said, wait a second, why would I have to pay that off? It's 0% interest. I don't get charged interest. That's the whole point of the education system. Lender said, sorry, you got to do it. Now, by the way, the lender's investors who gave the lender the money, because they're making so little, they're super strict on their underwriting. So it's completely unreasonable. So anyways, back to the story. How are we going to pay off the loan? Well, I have 40,000 in Nvidia stocks, but oh no, it took a dip the last 2 weeks. If I sold them now, I would lose $5,000 from where I bought them, but they had to do it. So they did it. Now they've got no Nvidia stocks. They sold it at a down cycle. And guess what? If they would have held on to it for a couple more months, it would have gone back up, not just what they paid for it, but 10% more, 15% more. And that's the problem of getting caught last minute. You don't have time to see things through. So they did that, paid it, but still, to liquidate money from your Wealthsimple or your Questrade, it takes time. So the transaction time took so long, they missed the closing date. And guess what? Now they're in a lawsuit with the sellers who needed that money, of course, to buy their next place. So it's a huge mess. Again, what was a great rate is now still a great rate, but with massive penalties and inconveniences and opportunity costs lost in the market. So it's about how much money's in your pocket, not about the interest rate you get to brag to your friend about. Very different things. That's one story. Yes, that's an extreme story, but it can happen, whether it's all of those misfortunes or just one of them. So again, moral of the story, just like I tell my business owner clients, hey, listen, for your business, if you're chipping out on labor or a tool or anything else, you get what you pay for. So keep that in mind. Be smart, guys. Yes, save money, but make sure that you do your due diligence. Thank you.